In this video, we're going to talk about the average amount of debt in each US household and why that big banks keep making such a large profit off this debt and the average American household has a hard time advancing their level of wealth. I'm Tim Wolf, welcome to the channel. If you are new, please go ahead and hit the subscribe button. And if you get any value out of the video, please hit the like button. So first, let's look at a breakdown of the average amount of debt in each US household. Credit card debt, the average amount is $5,315. Auto loans, a little over $19,000. Student loans, a little over $38,000. And mortgages, a little over $200,000. This is the average. So you may have more, you may have less, you may not have credit card debt, but you may have more student loans. It's just the average across the board. Now let's put these side by side with the average interest rates per each loan. So for the credit card, the average interest rate in America is 14.75%. For auto loans, it's right now 4.19%. Student loan, a little over 4% on average, and mortgage, just around 2.9% right now. Meaning that the amount of debt that you have, you are going to pay a penalty to borrow that money. It's called interest. So the interest that you pay does not go towards the principal of the loan at all. It doesn't help pay off the loan at all. It's just money that gets paid to the bank or whoever you have the loan with until you completely pay off the loan. So let's look at how much these interest rates are costing the average American household. For the credit card debt, it's going to be $784. Auto loan, it'd be $826 a year. And student loans, it'd be about $1,500. Mortgage, a little over $6,000 a year that you are paying purely in interest. From your perspective, the money's going right down the drain. From the big bank perspective, it's going right into their pockets as pure profit. So if we add up the average amount of interest a US household is paying, it would come out to $9,241 every single year in just interest. Now this is the interesting part of the video. If you take that amount of interest, the $9,241, instead of paying it in interest that just goes right down the drain, it doesn't add to your net worth, it doesn't build your wealth at all. What if you took that money and you invested it every year for 30 years? You would finish with over $2.1 million. Well, I'll tell you what, somebody is finishing with $2.1 million off of that money. It's not you, it's the bank that you have the loan through. But what if it could be you? So how do you get from paying the man to being the man, to putting yourself on the other side of the equation, from being someone who's just flushing money down the drain in interest? Instead, you're on the flip side where you're making money off of investing. You're making money off of compound interest, because compound interest paid to someone else is a punishment, but compound interest gained through investments is what's going to make you extremely wealthy. There's many different ways to put yourself on the other side of the equation. Obviously, I don't expect you to never have a mortgage. I don't expect you to have one for 30 years. I think you can pay it off quicker than that. But there's things like credit card, student loans, auto loans that you don't need to have, or you can pay off right now. So you stop paying the penalty through interest and you start taking that money, not even talking about the payments that you're making. If your car payment is $500 a month, we're just purely talking about the interest, the penalty that you're paying from having a car loan. If you took that and invest it, now we're on the road to $2.1 million. I'd rather have that $2.1 million in your pocket than in the pocket of the big banks. Because think about it, every 30 years, the big banks on average are making over $2 million off of each US household. Make it stop. I mean, you be the one to make the decision to put yourself on the other side of the equation. It takes patience, it takes sacrifice, it certainly takes hard work. You're going to have to work more than 40 hours a week, I can promise you that. And if you do have more questions, you can comment them down below, or if you want to see a video about a certain personal finance topic, go ahead, comment down below, and I'll be sure to make that video or answer your question. Thanks for watching this video. I will see you guys next week for a new video.